Today, what we will be doing, let's analyze the entire Sensex movement. Right now, if you look at it, Sensex is well over 76,000 plus, right? We are at around 76,400 levels. And yes, in the last traded session, we have seen a huge gap up in the Sensex and even Nifty, and majority of the indices have had a huge gap up. So now, will this sustain for a very longer period? One, today, which is June 4th, will be a very clear judgment day. Let's watch out. And key sectors, be it like public sector units or even your defense, railways, infrastructure, right? Construction, your automobiles, specifically into the EV theme, right? Electrical vehicles, the auto ancillaries, public sector unit banks, right? Yes, last one and a half year, public sector unit banks have had a very crazy move. But still, if you see right now, they are still available at an attractive valuation. And the best part in banking is earlier, 5 years, 3 years before, we had a problem of bad loans, NPA, non-performing assets. And because of these bad assets, banks need to provide more in provisions, right? So the net profit wise, they have to declare lower numbers. And if you just compare in the recent quarters, the NPA levels have come down, the quality of the book has increased for majority of the banks. And as a result, they were able to reduce the provisions. And that was clearly visible in the last quarter, right? If you see January, February, March 2024 quarter, we have seen almost all the banks have declared some positive numbers, some good numbers because of lower provisions as well, right? So two actionables or two things which you need to remember, considering a strong government with a very good majority being formed, and even Mr. Narendra Modi promising that within the first 100 days of the tenure, there'll be major announcements or there'll be major amendments which will be brought, right? That is something which stock market cherish. And apart from that, domestic institutional investors, DII, have been a continuous investors into the Indian market from a very long period, right? Past one and a half year, even though we saw some liquidation from FII, DIIs have always been pumping money into the market, right? Domestic institutional investors have always been pumping money into the market. That reflects more confidence from the retail investors as such, right? DII means your mutual funds, your wealth management firms, right? The domestic investments are flowing in good. So when the Indian population is investing more, and mind you, the number of people, the population that is investing into the Indian stock market is still in single digits when you compare to the overall population. Whereas developed countries, it is more than 50%. US has almost 70% plus who is investing into the market. So even India moves into a double digit number. We see a lot of growth happening in the Indian stock market. And FIIs have been exiting from the Indian market because of this key event. Like once this is also clear, and when a stable government is formed, we can expect more FII inflows. And the last traded session on June 3rd, one thing to observe, we have seen a very steep fall of India VIX, right? The volatility index has fallen down. So now we are at around 20 levels. From around 24 levels, we are at around 20 levels. Anything less than 20, yes, it's a good place to be. So considering macroeconomic scenario, right? Even the collections of GST has been like record highs, which reflects that yes, there is a good growth in the Indian companies. So considering that, yes, long-term version or long-term view of Indian markets are intact. Maybe in the short term, even if we see some small blips or we see some profit booking or we see some small correction, that is a roadmap or that is a trigger for the next bull run to start. So always have a long-term view in the Indian market and always be bullish the current macroeconomic scenario, right? So if I just need to share my screen, I'll just show you the Sensex movement, right? So right now we are at around 76,400 levels, Sensex movement. And if you see the entire movement up to 76,000 levels of Sensex, it took almost 23 years for the Sensex to complete its first 38,000 levels. And the next 38,000 levels, it just took 3 years. It just took 36 months. And the numbers, if you see, it took 36 months or 3 years for it to double from the levels. And it took 23 years from the first 38,000. Now, your perception, let's see how it will be differing. First of all, the first 38,000 in 23 years means it is 325x. Because when we consider Sensex from the base of 100, it has given 325x. The last 38,000 in last 3 years, which means it is 2x of your investment, right? It gave 2x returns. Now, someone who just timed the market, even they miss few days, even I'll just give you a very good example. Whoever have been worried about, sir, yes, because of the general elections, because of the FII pulling out money, I'll be completely exit my portfolio. If someone have completely exited the portfolio last week, what would happen because of the gap up which happened on June 3rd? That's why I always say, do not time the market. Rather time entry and exit into stocks and sectors, right? Do not aim for complete exit of the portfolio and do not be away from the market. Maybe specific stocks, sectors, you can time entry and exit. And what are the key pointers here, right? What are the key pointers from this learning? First of all, time in the market is more important than timing the market, right? So whoever have been like, sir, I will enter only when the markets are at all-time low and I will exit when the market's at an all-time high. You cannot time the high and low. Rather than timing the market, time the entry into stocks and sectors. Find good quality companies in their earlier stages of growth and stay invested for long term. And that is how you create wealth. So some quality companies, for example, Hindustan Aeronautics Limited, right? In our community, we have identified this way back in 2022 in October, right? So when we identify some quality companies, so you be there and you just keep adding them, right? You average up rather than averaging down, right? And third important point, even though in 36 months, in the last 3 years, Sensex has doubled, there are many strong companies, many strong sectors have given multi-folded returns, right? So just a simple example, your HAL is right now 7x from the time we have discussed from October 22, right? Your Cochin Shipyard is 6x. It is a 6 multi-bagger, right? Your Titagarh rail system is a 3.5x. Mesogon Dock is a 4x. So apart from the Sensex movement, there are many companies which have given multi-folded returns. And lastly, nothing is more expensive than a missed opportunities. So there are people, sir, I have missed one opportunity, right? Maybe like let's say defense. Sir, I have not been able to enter into defense. So it's okay even if you miss one sector, but it is not okay if you do not understand the pattern. Yes, if a sector or a stock which has been very successful, you have to study the pattern and can implement the same in many sectors. If I just need to give you an example, in the last 3 years or in the last 3.5 years, if you see, not only defense, railways has done well, not only railways, public sector unit banks have done well, not only these 3 sectors, electrical wires, your Polycab India, right? Your KA Industries, your Havels India, your RK Cable Limited, right? I can give many such examples, right? So nothing is more expensive than a missed opportunity. So you need to learn and get into that segment where you keep your eyes open and be a learner. Someone who keeps learning. Sir, yes, I'm a lifelong learner. You are always open to new ideas. And someone who keeps learning, they are on the path to identify multi-bagger opportunities in the stock market. So now let's look at trading view. Yes, if you see yesterday, right? Yeah, if you see yesterday, we have seen a gap up in the Indian stock market, right? We have seen a gap up in the Indian stock market, and this has been mainly because of the pre-exit poll, right? Pre-exit poll results. And anyone who are like, sir, yes, yesterday market has opened a gap up, but still the candle is negative. For example, RVNL or any stock which has had a gap up, sir, why the candle is gap up? Why the candle is red even though it is up by 6%? Now what I want you to observe, right? On the last trading day, which is on 31st May, what is the closing price? The closing price is 381 rupees, right? Yeah. And today, June 3rd, right? June 3rd, what is the opening price? Opening price is 425 rupees and closing price is 404, right? It was a gap up yesterday. As it has suddenly gapped up, it went up to 425. It has opened at 425, and when the closing is at 404, as the closing is less than opening price, that is why it will reflect as the candle in red, right? So if you wanted to have it on last trading day closing price, for example, yes, on the earlier day the closing price is 381, and on June 3rd the closing price is 404, which is above than the earlier closing day. If you want to change the setting, what you can do, you can right click on the chart, go to settings, and in symbol you have color bars based on previous close, right? If you just select it, the candle will be moving to green, right? So it will be taking the last trading day close, right? It will be taking the last trading day closing price and the closing price of the present day. If the present day closing price is above than the previous day closing price, it will give you a green. If you untick, it will be taking the opening and closing price for the present day. So someone who are not aware, just take a note of it, right? Just take a note of it. Yes. So yesterday, when we see about Nifty, yes, Nifty has moved wonderfully well. And even on June 3rd and even on June 4th, which is the D day, right? Where the election results will be coming out. So both the days are highly volatile days. And you cannot set a support. You cannot set a resistance, because in this kind of a high volatile days, your support and resistance both, it will be a wild market, right? It will be a very wild market. So, sir, what are the actionables I have to take? First of all, yes, preferably it's better to be safe than being sorrow. So even on June 4th, I would not ask you to heavily trade, right? Whatever positions which are already there, keep continuing there if they are stronger. Any fresh entries, play safe. And third most important thing, this is what I want you to do cleaning process, right? Cleaning. Sir, what is cleaning? Remove kachara stocks from your portfolio. Sir, yes, I have been holding few companies which did not move for the last couple of months, which did not give me profits, which have been a losing companies for me. Or even that company, when I check in the last couple of quarters, right? When I look at screener, the last couple of quarters growth, it is degrowing. Or last couple of years, it is degrowing, right? There is a problem with the company, right? Internal problems. Maybe the CFO is exiting, or there are some regulatory issues, or the sector itself is not moving. So any positions in your portfolio where you are stuck for a very long period, where they are not moving anywhere, or where they are in a losing streak, as we had a clear gap up on June 3rd and even on June 4th, right? We do not know what will happen if there is a gap up, and if we are in a good profits, clean, right? Remove or get rid of all your kachara stocks, clean up the portfolio, right? Clean up the portfolio, right? Even yesterday, yes, Bank Nifty has done well thanks to public sector unit banks, right? It has had a huge gap up, right? Private sector banks have moved, and beyond that, if you look Nifty PSU, right? If you look at Nifty PSU banking index, it has had a clear gap up. And as we always say in our community, right? In our learnings, we always focus on companies, right? We always focus on companies where it is on a clear breakout levels, right? So PSU banking index, yes, in the last couple of days, in the last couple of weeks, we have been closely following because it's on a clear breakout zone, right? Clear breakout zone, right? So yes, so once the same government will be continuing, even PSU index, not only the bank, the entire public sector unit index also is expected to grow along with the manufacturing, constructions, and infra theme. It will be moving out. And yesterday, one good point to observe is India VIX, right? The volatility index has reduced by almost 14.9 or 15%, right? So right now we are at around 20.9 levels, right? So anything below 20 levels, India VIX is more comfortable zone. Sir, I'm a very conservative investor. Yes, for you it should be less than 18, but yes, anything less than 20 is a comfort zone. So the India VIX volatility index is lower and market-wise key sectors moving. And even on June 3rd, we have also observed FII also pumping money into the market. Almost 6,500 crores have come into the Indian market, right? From FII. So let's watch out if there is more inflows coming when the big boys are entering into the market, right? When the FIIs, the DAs, when the big boys are entering, when we see a huge volume spike. That's why I always say it's not only about the qualitative analysis of a company, it is about quantitative analysis also. When you see a good price combined with a heavy volume that is coming, right? At the bottom of the chart, when there is a very good volume, green bars are coming, which means institutions are entering that stock. Technically, you get that. Screener, go to screener. At the ending of a company, when you enter, you see a quarterly increase of FII stake. If the FII stake is increasing, be in those companies where the big institutions are there. The 10 years or a 1 decade or a 2 decades growth story of Indian market is intact, right? And this is a time where you need to have your investments in the right Indian companies. Maybe yes, in the last 6 months or 1 year, we saw some sudden spurt in the Indian stock market. So even though there is a slight correction or there is some profit booking, that is a good trigger or that is a good catalyst, right, for the next bull run to start. But for a long-term view, like more than 1 year, 3 years, or 5 years, have a clear bullish zone. Never short the Indian stock market, right? Be in long, be bullish or be positive. Okay. So I hope everyone loved this discussion. So let me know your key takeaway out of this discussion below, right? Just let me know below what is your key takeaway.